right, guys, how we doing? Here we are. It's what was it? It's Tuesday, the 22nd of October. We're looking at traditionals today. So poll went up early today, and XiLinx is our winner today. Some interesting chart. I apologize, guys. Whatever's in the air today is bad for me. So hopefully that won't be a problem as we get through the video here. This shouldn't take long. It's a relatively straightforward count. I'm on a weekly here to get all the way back to the '09 low. So now I should note here, and I think certainly the reason people are interested here, we've got earnings coming tomorrow. So first question is, do you want to trade it, the day before earnings? I mean, it's so sorry. God damn it. You're certainly adding some risk to it, right? Just the volatility as we come out of that and the potential for a miss. So I'm assuming most people are long here. This has been just a beautiful impulse. If I were, see, I would do it with options myself here, but well, let's just break it down here. So again, I'm on a weekly, right? So we're really getting a lot of history here. So from the low, even though it's not, we go in with a low here at 14 and a high at 146. We certainly have the conditions to warrant going to log scale. So this helps pop it out a little bit. It's again out here on the weekly. You're not getting just a beautiful. You're not getting that, right? But given the alternatives, I think you've got to go with this direction. Now here in log, this is shallow. If I take this out of log, at least I'm getting, so you wouldn't, right? We wouldn't know at that time. You wouldn't be in log at this point here. We're coming up to the 50. It looks like this structure was involved here. So we had a little dip here. Here's a little low volume node. So I'm more inclined to go with the 1-2 here. Let's take that off here. I was just trying to make that point. Again, even though, that's not a beautiful, nice, clear ABC. We're not getting that. But again, you just, a lot of times what you have to do is kind of work backwards. Is when it's not just jumping out at you. So if that's the 1-2, at least I'm getting closer to a 50 here. Now, I looked at the alternate that we had put the 1 here. But I'll show you why. As we look coming down here, well, we could just use something as simple as using the Elliott oscillator. Clearly, this is the strongest move here. Right? So this is a strong contender for our third. Now we've gone deep for the 4 here, but let me show you a few things here. So this just how right? I hadn't looked at this. So just bring it up. Here's how I would do it. Again, I recognize I don't love this too, but it's the deepest retracement I have along the way. So in terms of backing this out, well, if I'm going to play this as the 2 and the big rip here is my 3, well, I got to get a clean impulse, and obviously I'd prefer it to be technical. Well, from the 2 to the proposed 3, right, so I'm getting a couple of taps here at the 38 and then rip all the way to 4th target. So that's a big move, but I think what locks me in here is this. So if I take the length of the 1 and project it from the, get right on that, if I can get on it, right there. Okay, so we're, I don't know if it's anything different in log here that would make a big difference. So here's, again, so sorry guys. Here's our high probability zone. Right now, with log or otherwise here, it's going to be slightly different. So I think that if I take it out of log, we're through the 200. If I stay in log, we're in the 1618, 175. So I'm more inclined to be looking at my 3 right here per that, and then just kind of thinking, well, how is that? If that's 1, 2, and this is my 3, 4, and 5, so I've completed the 5th of the 3rd up here to accommodate this impulsive move here. Well, I kind of want to, I don't know if it'll make any difference here, but I kind of want to take a look at the length of the 1 projected from the 2. Checking in log as well. Sorry. So now it's certainly different here. If I come out of log, we're coming up shy of the 2618. I mean, that's the extreme for a wave 3, log or not. Again, just kind of looking for more confluence to tell me that I'm right about that 3. Well, the first thing here, the ABC coming down. So if this is correctly labeled as the 2 and I've got my 3 going in here, well, look what I've just done. All right, so just in the process of kind of, it's not real clear as to where they are. Again, I'm still on a weekly. All right, so what is that, 2 days before earnings, we retraced to a 50 after well, now it's clear as a bell, right? It's hard to miss the ABC here. Additionally, can we get more confluence there? So if I take the length of my A and project it from my B, all right, there's the 100 right there. I mean, that's about as good as you get, right? The confluence of the 100 and the 50. So given that setup here, your volatility is likely to be higher, right? So if you're buying options, you're paying for that volatility because of what's happened here as we've come down. Well, shit, what would we hit that? That was April 15th. So as we've gone through this very clear ABC into that low, volatility likely higher here. I'm not going to go over an option model, but the point being that if you were to be long here and you were looking at options, you'd want to buy in the money to reduce some of the volatility premium that you're paying for, right? Which means you're going to have to pay more for the option. So what I would not do ever when you have high volatility is buy something out of the money, because all you're paying for is time and volatility. So when you have the higher volatility, you want to buy in the money to try and reduce some of that. And then you at least 90 days. That's me personally, right? Because I don't want to get that time burn to eat away at it here. So minimum 90 days. So you're going to pay for that. Particularly the volatility, the options will be expensive the day before earnings, but the technical pattern is so good. I would just be long. Right now, you could be fancy, right? You could sell some out of the money. You could not sell it out of the money, put spread below the 65. There's lots of things you can do with options to give yourself a net delta long position here, right? And try and offset some of the costs. So that's actually what I would do. I would sell the put spread here. I wouldn't do it naked unless you're very, very comfortable trading options. I'd sell the put spread here to offset the cost of buying an in-the-money call here, prepping for that. So if I'm right, I get the time decay of the option spread here and then just the straight delta off of the option. So that's something to consider. I mean, it certainly is pretty technically. Now, if you get a miss here and you get a big disappointment, expect the volatility to be severe. So you're going to need to exit. I mean, I would, right? So here's the temptation with options. It's always dangerous, right? You can see a reaction come down here. And because you go, oh shit, I got 90 days. I have plenty of time. You tend to overstay. That's always the danger with options. So you have to have a clear exit plan if you're inclined to be doing that. So it's got to be, okay, if it breaks this price. So I mean, certainly you can make the case here that if we go down, we break the 65, you'd be breaking the 1272, which is your second most common target, as it would be sitting here right above the 233 in the golden zone. So if you got a surprise and you got to break down, I mean, 65 is your last stand here, right? So if you saw something like that, there's still the possibility here we could come down. What's our difference here from 94 to 76? I mean, that option's going to be losing value quickly here, and these are going to be upside down on the spread. Now you can, because of the time premium, as long as the golden zone holds, that can resolve itself in your favor. But you got to be really careful about that and really know what you're doing, because otherwise you'll end up you certainly could end up losing money here. If this goes if it goes deeply down below here, you're going to lose the money on the spread, less what you took in for the credit, but you're going to lose 100% if it expires out of the money of the call that you bought. So try and at least have an exit point where you say, regardless of what happens here, this is where I take my loss, right, before it becomes a bigger loss. That's always the danger with options. It's very easy to overstay and say, let's see how it looks next week, next month. Careful about that. But the actual trade here is pretty straightforward, right? Low to a 50, ABC, right to 100. What's not to like there? It's just, now, if you wait, right, so some people go, oh shit, I'm not taking this right into earnings. Well, Now, how big a move we're going to get here? Let's, if you got something significant here, well, we kind of back into it. So just come in the opposite direction. Excuse me, guys. So if we got to pop up to something like that, right, that's a reasonable spot where you might see, right, because we got a long way to go. If this is going to realize this fifth up here, right, so here's just straight algo play. Right, so from the 50 to the target up here, you got a long way to go, right? So you're going to, well, that's what I was trying to do is this. So if you got a big surprise, right, earnings are great and they're really good, you got a long way to go here. There's plenty of time to get in on that trade. So don't feel like you have to do it the day before earnings, right? Yeah, you can be a hero doing that, but recognize the risk, right, if there's a miss. But what's the target up here? 167. We're sitting here at 95. You got options there. Pardon the pun. Okay, guys, there you go. I'll be back with one more.